bring you a rational and unbiased perspective on current events and life in Tampa Bay. He's a successful entrepreneur, published author, top listing agent, a real estate and finance expert that goes to bat for you every day as a consumer advocate. Your host and the consumer quarterback, Brandon Rhymes.
Yes, here we are again, another day helping you win in any marketplace, as we always say. Save our hotline number. We'd love to talk to you on the phone. Call or text our line. We've had an uptick in calls, and we greatly appreciate that. Our message seems to be resonating. We want to help you understand your buying decisions, and by reaching out to the hotline, you're supporting local area businesses right here in Tampa Bay. 813-750-0550.
You used to call me on my cell
We love it when the hotline rings, 813-750-0550. We're going to talk about credit today. We're going to talk about the mortgage industry, the real estate industry, some of these hedge fund buyers that are coming in, making some offers on properties, instant offers. And we're going to dive deep with Diane Vance and William Crowley here today. We got our A-team in the house when it comes to real estate investment, qualifying for property, getting into ownership instead of renting. So we're going to dive in deep today on some of the real estate, more specific topics and information here on the Consumer Quarterback Show. I want to give a quick shout out to Replenish IV Solutions, the science of nutritional balance. You know, they will come to you, or you can go to their office. They've got a Gandy location, North Tampa location there off of Bears up in Carrollwood, and a Wesley Chapel location. But it's a really cool opportunity to have a vitamin infusion drip. They're going to give you vitamins directly into your bloodstream. And, you know, we all are looking to increase our immune system right now. Feel energized, hydrated, and replenished. Reach out to Replenish IV Solutions and let Stephen and Lisa Gunnan know the Real Estate Quarterback sent you. All right, let's jump right into it. So we've got William Crowley on the phone, and ladies first, Diane Vance, welcome back.
Hey, good to be back, Brandon. I'm going to talk a little bit about, William and I are going to talk about credit. I'm going to talk a little bit about the Fed when they met yesterday. So I'll discuss that slightly, and then we'll get into credit with William.
All right, William Crowley in the house.
Hey, the Treasury, Janet Yellen moved over from Fed to the Treasury, right?
Well,
she's the Fed chair now.
Fed chair before. Now So now
she was previously a Fed chair. Yep.
Yeah, Fed chair. All right, William Crowley here. Credit restoration. We're going to be talking about some of the myths about credit repair, date of last activity, the 14-day window for I guess you would say similar transactions, how it does or doesn't affect your credit report. We'll delve into that and a few other things as well.
Awesome. I love it. And we always talk about, our real estate listings on the show. If you are a seller out there, you're hearing it's a hot market, but do you really want to do it on your own? We've seen lots of money being left on the table, sellers mispricing their properties, taking offers they shouldn't have considered because of different scenarios that play out with financing or inspections and appraisals. There's lots of things that can happen, so don't do it on your own. We own the Platinum MVP team at Keller Williams Realty, and we love to help you, and we take great pride in helping our sellers profit more on the sale of their real estate properties because we feature their properties live on air on our syndicated radio and TV show. We air in 85 different outlets, smart television as well, Apple, Amazon, Roku, as well as, of course, right here on the radio. So we got a hot property here, 13204 Fawn Lily Drive. We just did a $5,000 price reduction on this beautiful property out in East Hillsborough Avenue. This is 13204 Fawn Lily Drive in Riverview. 6 bedrooms, 4-bath, 3-car garage, water features, waterfront on a pond, right here in beautiful Tampa Bay. And the home is decked out, over $100,000 in upgrades. A great opportunity to see our listings. Check out all of our listings at platinummvpteam.kw.com. All right, so Diane, we kind of joke a little bit sometimes, but the Federal Reserve met, and we all kind of knew they weren't going to move it. They're printing a lot of this money. They're watering down a lot of the economy. A lot of times people say, "Oh, this economy's booming. This economy's booming." A lot of people think quite the contrary. And of course, it gets into different sectors. Of course, real estate's hot, but what's going on in the stock market, what's going on in the bond market, so and some of the other markets. But when you look at that, the Federal Reserve met. They said, "Yeah, we're not going to move this federal funds rate," but a lot of people are saying, "Hey, that's causing a potential bubble in the stock market."
Well, actually, he was asked about the bubble. Well, he was asked, I'm sorry, not about the stock market, but so basically the Feds they're going to buy at least $120 billion per month of MBS, which is mortgage-backed securities and Treasury. So they know that, they initially started out $40 billion. So that they're actually keeping a lot of this economy going. And you're right, the stock is definitely, I don't know, it depends on the market, but there's a lot of things going on, with like GameStop and all that good stuff. And that was
Bitcoin, crypto.
that's a little bit different, things that we're all not used to. But as far as yesterday, he was asked about if he was concerned about the housing market having a bubble or forming a bubble. And he basically stated that the housing market and the tightness is what's led to significant price increases, but he thinks it will temper a bit. In other words, he doesn't think it's going to drop. He just thinks it's not going to go up as fast. He's not concerned. So it basically gave them the green light to keep purchasing MBS and Treasuries.
Yeah.
So he thinks that the economy is dependent on the virus progression. They do have vaccines out, so I think that we're not going to see the Feds raising their funds for a while.
Yeah, federal funds.
I think you and I were joking about why do they have a meeting, because we kind of know what they're going to say.
Exactly.
But home sales are up. December, they were up 1.6% in December for the country. So they are still up. So inventory was down by 13%, but yet home sales were up. So that's, it's interesting that it's that way. The median home price for the entire country, not the Tampa Bay area, is up 8% year over year. It's $355,900, which was interesting. But the signed sales contracts, last month were up. So December was a good month for year over year. And our January, I don't know about you, but we've been very busy.
Yep.
So as far as the, bubble in the stock market, not sure about that. Only because, I think it depends on the sector that you're looking at. It's
right.
It definitely has. It's definitely been a crazy year from last year. It's even starting out a crazier year. But,
it started out crazy, hasn't it? I mean, is it a house of cards? Is the economy built up on a house of cards? Are we printing too much money? I mean, some of the people say that, hey man, the day we left the gold standard, a lot of this globalism type stuff started happening because you got the International Monetary Fund. It gets very detailed on that. If you just joined us, we're talking with Diane Vance on the phones. William Crowley as well, our credit magician. And I'm Brandon Brimes here. I'm your host, of course. Now, William, did you want to comment on any of those topics we just mentioned?
Oh, definitely. I love talking about the Federal Reserve. We should have never went off of that gold standard anyway in 1913, because you look at history prior to that, we consistently fought against a central bank. And the Federal Reserve is nothing but a central bank. They just had to call it Federal Reserve because the people weren't going to accept a central bank any longer.
Right.
And then the crash on Wall Street, all these major catastrophes, I believe, are orchestrated as well. If you read, there's a great book out there, The Creature from Jekyll Island by G. Edward Griffin. Take a second look at the Federal Reserve, and we talk about all these major things that happen in the economy. They're all orchestrated. I mean, the 1929 crash on Wall Street, that was orchestrated by the bankers, just like the housing crisis in 2008, 2007. That was the result of one repeal of the Glass-Steagall. Now, these are just perceptions I have. I'm not no expert or anything, but the repeal of the Glass-Steagall Act hugely contributed to the housing crisis of 2007, 2008, I believe. Anyway.
I agree. Yeah, there's a lot going on there, and the difference between then and now also is just there was a lot of irrational loan programs, and we were allowing people that didn't truly have the money to earn the income. Mm-hmm. So there's a lot of people are nervous about a real estate market bust again, and we really don't feel like that's going to happen.
No, and that's what Jerome Powell basically. That's what he said yesterday. He is not concerned about that. It's a different world. The reasons of what happened in 2007-8 was because of bad lending practices.
Yeah.
That is not the case now. We definitely verify everything. You can ask any of my customers.
And Diane, don't forget now. I mean, that repeal of that Glass-Steagall Act contributed to it hugely as well. Because commercial and investment banking, you can't separate. You got to keep commercial and investment banking separate.
Yeah, that definitely. Yeah, when they started buying their own securities and things like that. Yeah. Yes. Yep. Exactly. So when you're lending and then you're buying, I worked for one of those companies that actually did that.
Right.
But,
you go back and look at the 1929 crash. That was one of the safeguards put in place. Was the Glass-Steagall Act to try to safeguard us from any type of chicanery in the financial industry forthcoming. But of course, they repealed that. And the Federal Reserve Chairman Alan Greenspan is the one that lobbied for the repeal. They started lobbying in 1987. He finally got it through at the end of the Clinton administration.
Mm-hmm.
Yeah, right before the housing crisis. But hey, don't get me excited about that now. I love that subject.
Yeah, there's definitely a lot to talk about when it comes to politics being involved and how it sways it, and it just feels like right now also in Washington D.C. there's more of a disconnect than ever with what's happening, and it feels like as a country we're going backwards in a lot of ways, a lot of the social things happening. But we want to talk a little bit more about things happening here on a local level, keeping it a little bit more upbeat and positive, and talk about some of the advantages or the opportunities that we have. For renters, great opportunities for renters out there. First-time buyers, some great loan programs, low interest rates, and if your credit is needing some cleaning up, of course, we got William Crowley on the phones here. William Crowley, the credit magician. More from Diane Vance as well. Diane Vance, Fairway Independent Mortgage. Again, support the local economy, folks. We want to support the local economy, the folks that are supporting our show, and we've been on air over 7.5 years now, so we really take great pride in putting out a great product for you to help you. And I can tell you from all of the calls and texts and emails and website submissions, and people are downloading our podcast, the Consumer Quarterback Show podcast out there. We get a lot of calls in, and people love the referrals we give them. We have not had one complaint. People are always taken well care of, and we're giving the best value that we can, and we're offering discounts to veterans, first responders, military, nurses, teachers. We're giving discounts. We're helping with legal advice. We've got lots of different attorneys associated with the show. Lots of ways we can help you here on the Consumer Quarterback Show. So stay with us, more from our expert contributors. We're going to dive a little bit deeper into credit coming up as well. We're going to talk about how you can improve your credit. And William even says, hey, this is stuff you can do on your own. I'll teach you how to do it. You don't necessarily have to buy anything or purchase anything. And Diane, I want to talk with you also about the hedge fund buyers and some of the the instant offer programs out there, and what's really behind some of the marketing schemes. And I'll say it's a scheme that some of these big companies are promoting right now. So we'll dive deeper into that. Stay with us right here on the Consumer Quarterback Show, consumerqb.com.
Thanks for listening to my daddy's show. For more information, go to consumerqb.com.
To get in touch with Brandon, call 813-670-7372. Online at consumerqb.com.
Hey, Brandon Rhymes here, Real Estate Quarterback Show, and talking about the Pinellas County update. Here's the updated residential listings and sales for Pinellas County. At the end of December 2020, the latest statistics from the GTAR, the Real Estate Board, we have over 2,985 properties available for sale at the end of December 2020. Now, out of those 2,985 properties, 2,107 sold. So we're up 172 sales. That's plus 8.9%. So the inventory is down, sales are up, and it's a great market to be in. You had 2,107 sold, divided by the amount of listed, it's a 71% absorption rate. And if you divide that out, that gives you a 1.41 month supply of inventory, meaning it's a strong seller's market. So we would love to talk to you. If you're thinking about listing a property, we help sellers maximize the exposure on the sale of their real estate properties by featuring them on our show. Give us a call, 813-750-0550. Call or text 813-750-0550, and check out consumerqb.com. That's consumerqb.com. Thanks so much. Make it a great day, and we'll see you at 4 o'clock drive time on AM 860 The Answer.
My friends, when choosing a listing agent to sell your home, their track record is critically important. Dennis Prager here for Brandon and Lindsay Rhymes, owners of Platinum MVP Team at Keller Williams Real Estate. They're consistently rated by the MLS in the top 1% of all Tampa Bay realtors, and that's a big deal. Brandon and Lindsay are always among the top realtors in the state. Call them today at 813-750-0550.
Find them at platinummvpteam.kw.com.
You're listening to The Consumer Quarterback, Brandon Rhymes, online at consumerqb.com. Brandon is Tampa Bay's #1 consumer advocate for real estate and financial advice. Call Brandon today at 813-670-7372.
All right, welcome back. Thanks for sticking with us. Brandon Rhymes here, Consumer Quarterback Show, powered by the Platinum MVP Team at Keller Williams Realty. We want to help you win in any marketplace, and we've set up this show as a consumer advocate-based program. We've got Diane Vance, Fairway Independent Mortgage, on the show, as well as William Crowley, our credit expert here as well. And this segment is brought to you by Discovery Golf Cars, a.k.a. the Golf Cart Depot. They got lots of opportunities for you here. Easy Go, Star EV, Cushman, new and pre-owned, and they will bring the golf cart to you as well. Longtime friends of the program, make sure you let them know the Real Estate Quarterback sent you. Golf Cart Depot, a.k.a. Discovery Golf Cars. A couple of hot listings for this segment. 1010 Bay Esplanade. We also just did a price reduction on this beautiful property on Clearwater Beach. It's on the north side of Clearwater Beach, Millionaires Row, surrounded by multi-millionaires. Beautiful property here in Tampa Bay. And this property has a short walk to the intercoastal waters or even the beach. Right there, you're on the island, of course. 1010 Bay Esplanade, just reduced, almost 3,200 square feet, 4 bedrooms, 3 bath, 2-car garage, and you have a private apartment, so you can have a nice rental income built in, and it's a private sun deck. So great opportunities right here in beautiful Tampa Bay. 5727 Biscayne is another condo that we have listed. Now, this one's up in the New Port Richey area of Pasco County. This one is number 201 in Newport Richey, 5727 Biscayne Court, 874 square feet, 2-bedroom, 2-bath, 2-screen balconies. You got a covered marina and a boat dock with this property. Beautiful opportunities at platinummvpteam.kw.com. All right, so we're going to talk a little bit more about credit during this segment. We've got William Crowley and Diane Vance here on the Consumer Quarterback Show. William, you want to lead off here? When it comes to credit, what are you seeing these days? What are you seeing on the credit side?
Well, I see a lot of misconceptions out there in the industry. One thing is the date of last activity. I was just talking to a client earlier today about date of last activity, and they said that, well, I had an account, but that was years ago. And I said, okay, you opened an account back in 2005, but on the credit report, it reflects the date of last activity. Now, that doesn't mean when you open the account, that means that the date of the last activity, when was any type of activity performed that account, and it showed February of 2019. So I said the 7-year statute of limitations goes from the date of last activity, not the date that you opened the account. So don't get that. I want clients not to get that confused.
Okay.
Because a lot of people do. They think, well, I had this account over 7 years ago. Yeah, you had the account, but the date of last activity, it updates every time there's some type of activity, and it updates and it gives us the credit reporting agency 7 additional years to keep that negative mark on the credit report. But more importantly, the Fair Credit Reporting Act of 1970 allows you to legally intervene, and have those accounts deleted from the credit report regardless of the circumstances, because we're going after the credit reporting agency for violation of due process. So have no fear out there, folks. Don't let the date of last activity prevent you from improving your credit, because that sort of, I would call it a myth, but it's also a misconception being taken on by the consumers, where they think that the date of last activity happened when it happened 15 years ago, 7 years ago, whatever, but you got to look at the date of last activity on the actual credit report. So pull that credit report up using one of the free sites out there. You know, a lot of people say annual credit report, but I tell them annual credit report, Credit Karma, Credit Sesame, CreditCheckTotal.com, any of those sites, and always go to the category of activity. And it should have DLA in there, right, Diane? Date of last activity?
Yep, should.
Yeah, right. And so to reflect that, and then you look at that date, and that's That's how you can calculate the 7-year statute of limitations. But I say don't let that prevent you, because you can still dispute it using the Fair Credit Reporting Act and have that information deleted. Also, there's this 14-day window when you're going for, I guess, major ticket items, a car or a home, where it says, I think this law may have been passed in the last 10 to 12 years, where it says that the inquiries won't impact your credit score. And I tell people, check that out, verify that, because when there's a window, when you go to shop in that window of 14 days for a mortgage or an automobile, it's got to be similar. So if it's 14 inquiries for a mortgage or 14 inquiries for an automobile, look on that credit report and see if those inquiries reflect, more than likely you're taking a point deduction on your credit report. And that point deduction will be in the category in the area of 2 to 10 points. And I tell people just go in the middle around 5 points, 5-point deduction for each inquiry. So don't set aside the inquiries, because that doesn't impact the credit score as well. But once again, we use the Fair Credit Reporting Act to go after inquiries too, to have that information removed. But we want you to be knowledgeable about the process. That's what our credit restoration assistance program is versus your traditional credit repair companies. We're opening the door. We're teaching you all about the inner workings of the credit reporting agencies and how the Fair Credit Reporting Act can help you to overcome some of those misconceptions about your credit report. So that 14-day window, it's supposed to be the law where you're not penalized. But I tell you, if you see those marks on your credit report, those hard inquiries, then go after them and dispute them and have them removed, and see if your score doesn't improve based on some of those inquiries being removed from the credit report.
Yeah, William,
So
that's a good one, William. And also, Diane, I wanted to ask you about that, because sometimes people, when they're in a real estate transaction, it's a good idea to get pre-approved through 2 different lenders. That way, you have someone that's kind of waiting in the wings, and then they can have a streamlined situation, because sometimes lenders don't close. Sometimes lenders, they have specific criteria that they want to close deals in. I've had them even say, we're going out of business. We're just a small bank. We're going out of business due to COVID or whatever it was. Have you seen that?
Yeah, actually, so it's actually for mortgages, because of the changes that were made in, from the downturn. You can actually, some lenders say 30 days, some lenders say 45 days. You're actually good for your credit report on a mortgage, to shop. It's so the person can actually shop during the 30-day period.
Sure.
It should not hit your credit score. And that's the reason for it, so they can actually shop for a mortgage to give them time. And then what happens, and that's most recent changes with, between Dodd-Frank and the CFPB. So, there's a lot of changes that happened that are in favor for the borrower, which is good. And as far as, getting pre-approved, that's up to the borrower, and we run into that. The big thing I just ran into, I believe it's one of your customers, Brandon, that was on a listing, not on a purchase. And they said, they're pre-approved. Well, when I pulled the credit report, they didn't have another person on there, so they weren't pre-approved. Nobody pulled their credit. So I let the buyer's agent know that. And of course they went ahead and, did everything. But, it's interesting to me. We don't give pre-approvals unless I check everything out. So when somebody knows that it's one of my pre-approvals, they're going to have a full credit report.
Yep.
And it's going to show in the credit report, as William could say, that, he knows this too, is that when anybody pulls your credit, it's going to show up in your credit report.
Yes.
So if there's no other inquiries in there, that means that the credit was not pulled. So, So you want to, and it's fine. We do get, we get customers that have had it pulled several times within, so many days or weeks, because again, they're trying to find the best deal, which is good.
Well, let's leave it there for now. We come back. I want to talk about renters. I want to talk about investors and potential, you talk about Airbnb as well. And we got to talk about these hedge fund buyers coming in. And I believe they're using, some of these schemes, the marketing schemes. I don't like it. Brandon Rhymes here, Consumer Quarterback Show. Stay with us. Diane Vance, Fairway Independent Mortgage, William Crowley, and our feel-good story of the day, COVID Bandit leaves $1,400 tip for a staff at a restaurant. Stay with us. Consumer Quarterback Show, consumerqb.com.
This is Chris Voss, former FBI lead hostage negotiator and owner of the Black Swan Group, and you're listening to Consumer Quarterback Show hosted by my friend Brandon Rhymes.
To get in touch with Brandon, call 813-670-7372. Online at consumerqb.com.
All right, we're clear. Brandon, let me know when you want to proceed.
We're ready.
Alrighty, in that case, everyone please stand by.
Five, four, three, two, one.
You're listening to The Consumer Quarterback, Brandon Rhymes, cutting through your typical media nonsense and offering you a rational and unbiased perspective on current events and life in Tampa Bay. Online at consumerqb.com.
All right, welcome back. Thanks for sticking with us here on the Consumer Quarterback Show. We're growing our team at the Platinum MVP team. We're looking for realtors to join our team. If you know any great realtors, buyer agents, listing agents, we'd love to talk to them and interview them. We've got a plethora of leads, lots of business happening, so we'd love to talk to anybody out there. And we're also looking to expansion as well. So if you're in Lakeland, Bradenton, Sarasota, of course, all of Tampa Bay, reach out to the hotline. We'd love to talk to you. Of course, we've got our mortgage expert contributor on the show today, Diane Vance, as well as William Crowley, our credit expert, and 80 other categories that we can connect you with all of the best in Tampa Bay. Just reach out to the hotline, 813-750-0550. Just call or text that line. It's an off-air number, 813-750-0550. We can help you, of course, with credit improvement, mortgage, real estate, finance, estate, and tax planning. We've got a great estate partner, Joseph Pippin, tax planning as well, a very good attorney / CPA. She's one of the few that has CPA and is an attorney, international business. So many ways we can help you here on the Consumer Quarterback Show. Check out consumerqb.com. Also, something new here, streaming live. We're streaming live now Tuesdays and Thursdays at 12 noon and 1 o'clock. You can check us out on our Facebook feed as well as our YouTube channel. We'd love for you to subscribe to our YouTube channel. So we've been doing the live stream. We got it perfected now, and we're doing a lot of good things, of course. So we appreciate you hanging out with us here on the Consumer Quarterback Show. A couple of hot listings for this segment. We've got a property at 1813 East Knollwood. This is a property out in the Seminole area. I'm sorry, it's the Town and Country area of Tampa Bay. 1813 East Knollwood in Tampa. 1,300 square feet, 3 bedrooms, 3 bath, carport, fenced-in yard. And it's a great property in Seminole Heights. It is Seminole Heights, 1813 East Knollwood Street in Tampa. Check it out. Owners motivated, looking for offers on that property. We also have one on the river in Newport Richey, 6128 Oak Ridge Avenue. You got a full acre of land right on the river, and the property is just a gorgeous property. It's got some lush landscaping, waterfront, of course, bay access. Enjoy the best Florida lifestyle. Take your boat, your jet skis, and have fun and live that beautiful Florida lifestyle. 4 bedrooms, 4 bath, bay access as well. You go out in the Gulf of Mexico, go fishing. You got 4,200 square feet, 4 bedrooms, 4 bath, full acre of land on the waterfront, 6128 Oak Ridge Avenue, Newport Richey. And you can see all of our listings at platinummvpteam.kw.com.
Somewhere sunny and 75.
All right, so many great topics to talk about. Diane Vance, Fairway Independent Mortgage, and we got William Crowley, our credit expert. Let's talk about renters and investors, Diane. I want to talk about that, and then if we have time, hedge funds, and I've got Airbnb written down here, commercial. There's a lot of things I want to get to, but let's talk about renters first.
Okay, so renters can actually, I've been talking to a ton of renters that they're paying, anywhere from, if they're in a house, they're paying over $2,000 a month right now. even apartments, they're paying $1,400 a month. So they definitely qualify. If they're paying those kind of payments, they definitely will qualify for a loan. So a renter can get into a home, especially with, right now, tax time, they get refunds. Instead of paying first, last, and security, they can actually get into a home. You can get in a home with as little as 3% down. And if you're a veteran, you can get 0% down. So there's a lot of opportunities. Interest rates are so low right now that people can qualify for more than what they used to be able to. So, take advantage of this time to be able to do it. I have a lot of people planning. So they call and we go over everything, and we tell that, a lot of people are calling me telling me, hey, my lease is up in August, September. So what do I need to do? How much do I need to save for that period of time? So a lot of people are doing that. So there's a lot of different ways. You can use gift funds for down payment from relatives. You can, borrow from your 401k and pay yourself back. That's a big misconception. They didn't know they could pay themselves back. They actually pay themselves back with interest. You can, pull from IRAs. You can do a lot of different ways to actually get into a home. And then, of course, Brandon, if they use one of your agents and they're first-time home buyers, they can go ahead, or any buyer actually, you can negotiate maybe the seller paying part of the closing costs or something like that.
Yeah, absolutely. And even if it's a veteran, first responder, military, teacher, frontline workers, it seems like we're expanding that list to wherever. We want to help people. That's the goal. And we will offer a discount or a what they call a realtor rebate. So we can actually take a quarter or maybe even a half a point of our commission. And, it's our money. We can do what we want.
Yep.
And we can credit that at closing. So that's a really great opportunity. So I love that idea. Take the tax refunds, get a plan in place, stop paying overpriced rent for a small box that you're living in, buy a three-bedroom, two-bath home, buy a nice home, invest in your family, invest in your legacy. And then on the flip side also, let's talk about investors as well.
Yeah, so investors, we have a lot of investors that actually are individual investors that want to start, or they have homes right now and they want to, I had somebody that has 13 properties. That's their income. They don't owe anything on those 13. They built it over the years, and that is their retirement. So they're getting income every month from those properties, and they're continuing to buy, and they need a mortgage for this property. So that's their income that actually verifies. So they have started years ago to actually start planning and building their own wealth, and this is their retirement. It was quite fascinating, actually. That was pretty good. So she's actually ended up paying off all those mortgages over the years, and now they just continue to buy, every so many per year. And I have we have a builder that actually just recently, excuse me, sorry.
That's okay. So Diane's talking about just some of the opportunities that she has, and we're seeing for renters. We can offer a rent versus own analysis where we can break down the money. What's the outgoing cash money that you're paying for your rent, for your overall housing expense, really, when you start factoring in the other utilities, and then taking that money, funneling it into an asset that you're going to own, that you're going to build equity in, that you're going to have tax incentives, and then also for the investors, very similar story lies there, Diane.
Absolutely. It's very interesting. We have a lot of people that are, because they know that prices are appreciating. So they know equity's going up. So they are purchasing homes as investment because one day that is either going to be their permanent rental or it's going to be where they sell it later on. They know there's opportunity. So they're building their own wealth.
That's right. We're talking with Diane Vance, Fairway Independent Mortgage, local lender, support the local economy. I think your company, I remember you saying like $400 million in volume, or 40. What was the number last year?
Last year was $65 billion.
$65 billion in volume.
$66 billion. So the year before was like $40 billion. So yeah, quite an increase.
Top lender in the country. You're getting the best rates. You're getting the best loan programs. And also William Crowley, the credit magician here on the Consumer Quarterback Show. So let's talk a little bit about these hedge fund buyers, because they're coming in, they're making all these claims. You hear these people saying, oh, we'll list your house for 1%, like all these different gimmicks out there. And what happens is if you actually look at the fine print, what it says is, but you have to use our in-house title company. You have to use our in-house mortgage company. So there's a lot of advertising and you got these guys saying, we'll pay all your closing costs and all that. Think about it. it's not as easy as that. Okay, there's some strings attached. You got to do 2 or 3 transactions with them to actually get that deal. Have you seen some of that as well, Diane? What do you see?
Yeah, well, I'll tell you what I've noticed is a lot of these companies that come in and they sell properties and they don't pay transfer tax, they don't pay owner's title insurance, so it costs a buyer usually an average of $25,000 to $3,000 more to close.
Right,
and we're seeing that a lot. So hedge fund companies. Basically, a lot of mortgage companies are owned by hedge fund companies. We're an employee-owned company, but some of my competitors that are good friends of mine are they are owned by hedge fund companies, and people kind of need to understand what hedge funds are. They basically they're kind of like a mutual fund, but they're more aggressive, and they want to get positive returns in both an up and down market. So it's an alternative investment. So they have a lot of different ways, and one of them is real estate. Yep. So, it's affecting, I don't know that, we are definitely running into it though.
Yeah. And it's basically the bottom line with a hedge fund is it's a pool of investors. They're somewhat, how they hear you hear it said investors are sharks in some case. Yeah, it's fine print. You got to look out for that. There's different schemes that they play and with their words and what they say on their commercials. But we can buy properties cash right here locally. We've got a pool of investors. We also have a program through Keller Williams, Keller Offers. So if you're wanting to sell fast and you say, hey, I want to close in a week, we can make that happen. We can give you a great offer. So if you're selling cash, we would love to talk to you as well. Just reach out to the hotline or visit consumerqb.com, consumerqb.com. And William, you want to add anything on these topics we've mentioned?
No, I mean, I just definitely, when I talk to a lot of the buyers out there in my orphan file, when they're going through my credit repair first,
yep,
they're saying, well, it is convenient to to rent because I don't have certain responsibilities like home repairs and things like that,
right,
mowing the lawn, pool maintenance. How can we overcome that? Either Diane or Brandon.
Diane, go ahead, take that.
Well, how can they overcome that? Because they're going to have an increase in rents. It's probably going to be more than what those fees are. In other words, you go up $100 a month in rent or $70 or whatever it is every year. It's going to offset it. It doesn't cost you that much. Well, you could mow your own lawn, but let's say you hire it out.
Yeah.
Yeah. I mean, unless you want to hire it out, but what you're paying, what you're losing out on equity,
yeah,
and what you're paying in somebody else's towards somebody else's equity is probably far different than what you would actually spend.
Yeah. There's a reason why investors love to buy properties and rent them out, okay? And when it comes to that, to me, that's almost a little bit of a lazy excuse. Hey, you don't want to buy a house because you don't want to deal with the lawn and the pool. Well, you can rent that out, or you can pay that out, contract that out. And when it comes to the equity growth, I think that's why it's so important they reach out for that rent versus own analysis that Diane can put together. Once you look at the numbers on a spreadsheet, and Diane, I don't know if you remember any of the numbers off your head, but when you annualize that, I think it was an example we gave sometime, $200,000 house. When you take that out 1 year, 5 years, 10 years, you're talking about $30,000 in equity. You're talking about $100,000 plus in debt pay down. So you're paying it down at the same time the property's appreciating at record numbers right now, of course. And that difference, that gap is wealth. That gap is equity. And then they can access that equity with a home equity line if they needed to, or, worst case scenario, the other thing that people say, well, what if I have to move? Well, you can either rent the property out yourself or sell it. It's still a very liquid asset in the fact that it's such a hot market right now.
Absolutely.
Yeah.
Yes, that's absolutely true. And it was I actually have the numbers here somewhere, but it was quite a difference in how much you actually spent.
Yeah, and then
over the years,
you factor in the tax incentives. You're going to get some breaks on that, insurance paid in, or the interest paid. So, good stuff here. We got William Crowley on the phones coming back as well with Diane Vance. We're going to come back, take a quick break here. But I also want to talk a little bit about some of your predictions for this year, maybe talk about Airbnb, commercial real estate, and some more credit repair when we come back. Plus, our feel-good story of the day, COVID Bandit leaves $1,400 tip for staff at a restaurant. Stay with us. Consumer Quarterback Show. Check out consumerqb.com.
Hey, I'm Ken Shamrock, and you're here with Consumer Quarterback Show. And I say, Brandon Rhymes, knock out your competition.
To get in touch with Brandon, call 813-670-7372. Online at consumerqb.com.
Hey, Brandon Rhymes here, owner of the Platinum MVP team at Keller Williams Realty with your real estate market update for Hillsborough County in Tampa Bay. Residential listings at the end of December 2020 were 2,634 properties active as listings. That is down 2,498 year over year, 2,498 less listings. That's down 48.7%. Coming down and looking at the solds, at the end of December, we had 2,505 properties sold. That's plus 262 sales, plus 11.7%. So the sales are up, inventory's down, 95% absorption rate in Hillsborough County, and a 1.05 month supply, a strong seller's market as well in Hillsborough County. Reach out. We'd love to talk to you if you're selling, buying, selling, or investing in real estate. My wife Lindsay and I own a top 1% ranked real estate team with Keller Williams Realty. 813-750-0550. Call or text 813-750-0550. Also, you can see the website consumerqb.com. consumerqb.com, and we would love to help you win. I'm a certified negotiation expert, and we can help you win in your real estate deals if you're buying, selling, or investing. And of course, tune into our Consumer Quarterback Show, 4 o'clock drive time right here on AM 860 The Answer, FM 93.7 on the FM dial. Thanks so much. Have a wonderful day.
My friends, when choosing a listing agent to sell your home, their track record is critically important. Dennis Prager here for Brandon and Lindsay Rhymes, owners of Platinum MVP team at Keller Williams Real Estate. They're consistently rated by the MLS in the top 1% of all Tampa Bay realtors, and that's a big deal. Brandon and Lindsay are always among the top realtors in the state. Call them today at 813-750-0550.
Find them at platinummvpteam.kw.com.
You're listening to The Consumer Quarterback, Brandon Rhymes, online at consumerqb.com. Brandon is Tampa Bay's #1 consumer advocate for real estate and financial advice. Call Brandon today at 813-670-7372.
And we're back. Brandon Rhymes, Consumer Quarterback Show, Platinum MVP team at Keller Williams Realty, helping you win in any marketplace. That's our goal here. Every day we tell you something good in our feel-good story.
Tell me something good.
All right, so this was an interesting story. Just kind of summarizing it is a Colorado restaurant. A gentleman left a $1,400 tip with a message that said, "COVID sucks." So the owner of Notch Top Bakery and Cafe says the customer came into the restaurant on Wednesday, had breakfast, and he had only visited the restaurant one time prior, but he left a $1,400 tip with instructions to give all the 7 employees working that day a split of tips. So they all got $200 out of California. Really cool. There's a quote here that said, "That brought truly tears to all servers and cooks." Nobody ever thinks of the cooks, and the cooks were just so surprised and shocked. We were all shocked, she said, and we did thank him, but we felt like we just couldn't do enough. So there's your random act of kindness that we always talk about here on the Consumer Quarterback Show. A quick shout out to Brothers Easy Moving as well. Brothers Easy Moving, the official moving partner of the Consumer Quarterback Show. If you're planning a local or long distance move, reach out to Brothers Easy Moving. They can do a cross-country move. I recommend them highly. All right, we got William Crowley, the credit magician, Diane Vance, Fairway Independent Mortgage. And when you look at the real estate market in general, Diane, what's your prediction for 2021?
Well, it's supposed to be a very strong purchase market. That's what they are predicting, that this year will be a good real estate market. As far as mortgages goes, it's going to be less than last year because last year we had a lot of refinance. Let's face it, most people probably refinance or close to it. We still have people refinancing, but most people have done it.
Right.
And but they are predicting that the real estate market will be a good market this year.
William, same question to you.
Yeah.
Predictions.
Yeah. Go ahead. I'm sorry.
Yeah, predictions for 2021.
Yeah, I believe that the people are going to have been devastated over the last few months from this COVID with in relation to their credit. And so I would say don't get that depressed because there are laws that put in place. This is one of the greatest countries in the world because we have laws that don't encourage people to be fiscally irresponsible or anything like that. But it says, listen, we know things are happening. We're going to give you a second chance. So look at those consumer laws, the Fair Credit Reporting Act, the Fair Debt Collection Practices Act in specific, even aspects of the Uniform Commercial Code. I'm not a big fan of Dodd-Frank, CFPB, but the Consumer Financial Protection Bureau, but still look at all these laws because I think the Glass-Steagall Act, that should have been just brought back into place instead of Dodd-Frank and CFPB. But nevertheless, use these laws, study these laws, and use them to your advantage. And if you can't interpret them correctly, come see us. Our program is designed not only to help you restore your credit, but to demystify it as well. And we give you the information so that later on in life, you don't have to keep coming back to us. You have the information to move forward on your own in the legal framework.
That's right. That's right. And we were just talking about renters, and I just had another idea of why renters would want to get into home ownership. The cool thing, all the numbers add up, but the other thing is, and I know William, you like this because you like to throw big parties. Like as a renter, you can't throw the big parties, man. You can't, if you're renting, you might get kicked out, right?
That's true. That's true.
Yeah, you might get kicked
like
out.
That too.
You never know. So by home ownership, you write your own book, man. You write in your own book. And what about let's quick talk about commercial, because when you look at commercial, man, what a dynamic. There's so many different sectors and categories of commercial. I was walking around the mall the other day, trying to get my phone repaired. I've been having some major issues with Apple, but when you walk around, you look at all these expensive, you look at all these expensive stores, and it's like, wow, there's not many people in there, and you think about the rent that they're probably paying, and you really start to wonder, like, what's the business model going forward? Go ahead, Diane.
Good question. I don't know. I think that maybe, it's my personal opinion, and, some of the experts have said, I really think that you're probably going to have an opportunity if you want to buy a business building and have executive suites and rent it out. I think people are going to probably go into smaller offices.
Yeah.
Some businesses won't be able to, but I kind of think a lot of people are used to working from home now, so they don't need as much space. But I think if you have a building or you want to buy a building or you own a building now and you're finding yourself that you may want to, maybe lease it out for executive offices.
Well, that's a big one. See, I just sold 2 commercial properties on Hillsborough Avenue. Just so happened to be one on 8325 West Hillsborough, one on 1209, the other side of East down there. And both of those were that similar situation. They were a freestanding office building, and I believe there's a market for that because instead of going to the big high-rise, going up the elevator, you really can't bring your dogs to work in those buildings, and you're dealing with that other people around you type of scenario with COVID. These people loved it, but you could bring your dog to work, you can bring your pants, you have your pets, and you could also have a place where you can store equipment and things like that. So it's perfect for that HVAC company, plumbing company. Those types of businesses are still flourishing. Same question to you, William, commercial side. Well,
the commercial side, as far as pertains to credit, most of the people that are going to be trying to get these commercial properties, I don't know, I might be a little confused on that, but it's the person if they're going to use their business credit to consolidate these loans, they're still going to look at the personal side as well. So I tell people once again, always make sure the personal credit is up to par before you try to do anything with the business credit, and I guess getting those properties to rent out or whatever, to buy or purchase. So
that's something we should elaborate a little bit more on, William. Is we haven't talked a lot about that because most people would say, yeah, I understand, I got my personal credit, but you're saying you can establish business credit. That's interesting.
Right, because the business credit is in connection to they need a personal guarantor at the beginning stages of business credit, and that's going to be your own personal credit is going to be the personal guarantor for it.
Right.
So make sure that personal credit is up to par and strong enough to be able to substantiate that.
All right, last prediction. Go ahead, Diane.
And they qualify a little different on commercial loans than they do on residential loans by they actually use the property as the what type of rate of return and things like that. The credit William's absolutely right.
Yeah.
So, but they look at the actual property itself.
Yeah, the debt service coverage ratio, the debt ratios. You got cap rates that you're talking about. So it is a different animal when you get into those types of properties. Okay, real quick, last prediction. Just give me one or two words. Super Bowl picks, Diane. There's your last prediction.
The Bucks. What are you talking
Bucks.
about?
Okay, there we go. But what's the score going to be?
I'm from Kansas City, Missouri.
Kansas City. Okay.
Okay, I'm going to say the Bucks by 3 points.
3 points. Okay, there we go. Hey, another great show. Thanks so much. We appreciate you. Diane Vance, Fairway Independent Mortgage. William Crowley, the credit magician, helping you win in any marketplace. Consumer Quarterback Show, consumerqb.com. Please go out there and consider committing a random act of kindness. Do something kind for one another. Be a force for good in the community. Volunteer at your local church or food bank. And we'll see you next time right here on the Consumer Quarterback Show. Check out consumerqb.com.
You've been listening to The Consumer Quarterback, Brandon Rhymes. Whether it's real estate, consumer, or financial advice, let Brandon call your next play. Contact Brandon Rhymes at 813-670-7372. That's 813-670-7372. Online at consumerqb.com. And join us next time for The Consumer Quarterback Show.